I would absolutely love to own the Beatles catalog, Merck Mercuriadis stated in 2021. This bold declaration came from a man who has become one of the most disruptive figures in the music industry. Merck Mercuriadis is the founder of Hipgnosis Songs Fund, a company that has made waves by buying up the rights to some of the world's biggest hits. Under his leadership, Hipgnosis acquired song catalogs from legendary artists such as Neil Young, Shakira, Blondie, The Pretenders, and Chic. These acquisitions turned songs into valuable assets, comparable to commodities like gold and oil. With an impressive portfolio of around 60,000 songs, Hipgnosis quickly became a powerhouse in the music investment world. However, it experienced setbacks and needed to sell off. What caused its sudden failure, and what does it mean for the future of music? Hipgnosis Songs Fund is a British Guernsey-registered company that invests in music intellectual property. It was founded in 2018 by Merck and Nile Rodgers. Their focus is on acquiring rights to songs and the associated musical intellectual property. They believe that hit songs are long-term, predictable assets that aren't affected by economic cycles. This approach works because as the worldwide music streaming market grows, so does the value of these songs. People will always listen to their favorite tunes, making these investments reliable and profitable. Hipgnosis has capitalized on this trend, recognizing that the more people stream music, the more royalties the company earns. This model has allowed them to build a large and diverse portfolio. Hipgnosis doesn't just acquire music rights, they manage them actively. This includes revenues from playlists, covers, interpolations, and synchronization in movies, TV shows, and commercials. Since its founding, Hipgnosis has raised over $1 billion for acquiring music catalogs. Their financial milestones tell an impressive story. In their first year as a publicly traded company, they owned 5,000 songs. By July 2020, this number grew to 13,300, valued at more than £760 million. By January 2021, Hipgnosis had acquired over 57,000 songs. By the end of that year, their catalog included 65,000 songs, worth a staggering $2.55 billion. Hipgnosis Song Funds made major acquisitions and invested great money. However, they weren't profitable and needed to sell off due to some major issues. But first, let's talk about how they expanded and made major acquisitions. Hipgnosis Songs Fund made a bold entrance when it launched on the British Stock Exchange on July 10, 2018. The company raised £202 million, surpassing its initial goal. One of their first major moves was purchasing a 75% interest in the Dreams music rights for £18.83 million. This was just the beginning. In 2018, Hipgnosis made significant acquisitions. They bought Pooh Bear's catalog, which includes 214 songs, like Justin Bieber's What Do You Mean, and the English version of Despacito. They also acquired a 37.5% stake in Bernard Edwards' catalog, featuring 290 songs, including classics like Everybody Dance and Le Freak. Another important acquisition was the TMS catalog, consisting of 121 songs, including hits for Jess Glynne and Little Mix. Finally, they secured Tricky Stewart's catalog, adding another 121 songs to their collection. This catalog includes hits from big names like Britney Spears and Mariah Carey. These strategic acquisitions helped Hipgnosis build a strong and diverse portfolio, setting the stage for continued growth and influence in the music industry. Hipgnosis continued its aggressive expansion in 2019. They acquired Giorgio Twinfort's 182-song catalog, which features collaborations with David Guetta. By the end of the year, Hipgnosis held over 6,000 songs, valued at £1.2 billion. The impressive portfolio led to their admission to the London Stock Exchange premium segment. However, despite its high-profile acquisitions, Hipgnosis has struggled to achieve profitability. The company's financial reports have shown significant losses, and its revenue projections have often fallen short of expectations. For instance, a report by Shot Tower Capital revealed that Hipgnosis' revenue were overstated, leading to a 26% portfolio downgrade earlier this year. They were often paying 30 times plus multiples for high-profile catalogs. The company has had to suspend dividends and focus on debt repayment, further highlighting its financial struggles. Investors have lost substantial amounts, with the share price collapsing by 35.6% over the past year. But what if I told you that nowadays the everyday investor is able to invest in music catalogs that have historically phenomenal returns? Unlike a company like Hipgnosis who paid extreme multiples for high-profile music catalogs, investors can spend as little as a couple $1,000s and earn royalties from some of the biggest songs in the world. With Royalty Exchange, you can buy music catalogs with songs from artists such as Jay-Z, Justin Bieber, Beyonce, and much more, all in the click of a few buttons on their easy-to-use platform with no hidden fees. The investment minimum is super low, and on top of that, you can even list your catalogs for sale on the platform if you want to sell. There's thousands of songs you can research and choose from with information about the artists and financial earnings, from Drake to My Chemical Romance to even Lana Del Rey. The average ROI on these catalogs is over 10%, and the market is super liquid with users on the platform placing offers every single day. Signing up is super fast and easy, so if you're serious about earning money from your favorite songs like viral hits from Miley Cyrus to rap classics from Jay-Z and more that generate passive income for life, sign up today with the link below. Now back to the video. Despite its rapid growth, Hipgnosis faced significant challenges. One major issue was the overestimation of their song catalog values. As a result, debts increased and shares in Hipgnosis fell dramatically, from 130p to 54p between late 2021 and March 2024. Another challenge came with rising interest rates starting in 2021. Higher rates meant increased annual interest payments for the company, putting additional financial strain on their operation. The financial pressure forced Hipgnosis to make tough decisions. In December 2023, they sold around 20,000 songs from the catalog to pay down debts. These setbacks highlighted the risks involved in music investment, even for a company as innovative as Hipgnosis. One of the main issues Hipgnosis faced was overpayment for music assets. They spent over $2.2 billion on acquisitions, but these assets are now worth $1.9 billion. Out of 105 acquisition deals, 67 are currently worth less than their purchase price, revealing a significant financial misstep. Another critical problem was unrealistic growth predictions. Hipgnosis missed its growth expectations by an average of 23% annually. This led to a decrease in annual royalties, falling from $134 million to $121 million. These miscalculations have added to the financial pressures and challenges the company faces today. Another issue was the performance of passive versus managed catalogs. Surprisingly, passive catalogs perform better than those actively managed by Hipgnosis. Despite the company's claims of industry expertise and ability to outperform passive management, the actively managed catalogs in the fund's portfolio actually grew significantly less than the passively managed ones. There were also misrepresentations regarding ownership and control. Reports often implied more significant ownership control than was actually the case. Ineffective management systems compound these problems. The company didn't invest enough in systems to manage its large catalog efficiently. This led to issues with legal bookkeeping and collecting royalties, further affecting revenue. These challenges underscore the complexities and risks involved in managing a vast music catalog. Hipgnosis also faced issues with unrelated and excessive expenses. They spent significantly on award shows, public relations, and deals that were ultimately abandoned. These expenses added to their financial strain, contributing to the necessity of selling off parts of their catalog to manage debts. This sell-off was crucial to help balance their books and address the mounting financial pressures. The 6-year journey of Hipgnosis has come to an end. After its initial public offering, the company enjoyed early success, securing rights to hits by artists like Beyonce, Shakira, and Neil Young. However, later years were marked by struggles. Share prices fell, valuation errors surfaced, and internal feuds became public. In a major development in the music industry, Blackstone has emerged victorious in the bidding war for Hipgnosis, agreeing to acquire the music rights owner for a staggering $1.57 billion. Blackstone's offer of $1.3 per share surpassed rival Concord's bid of around $1.25 per share. The Hipgnosis board unanimously recommended Blackstone's offer to shareholders and withdrew its support to the Concord bid. The acquisition, executed by Lyra Bidco Limited, a Blackstone-owned company, will bring over 65,000 songs into Blackstone's already impressive music rights portfolio, which includes tracks from artists like Justin Bieber and Justin Timberlake. Blackstone already holds a majority stake in Hipgnosis Songs Management, the investment advisor to Hipgnosis Songs Fund. HSM is expected to continue managing the assets after the acquisition. The takeover would conclude a challenging period for Hipgnosis, which has struggled since its 2018 listing due to rising interest rates and changes in song valuations. In October, shareholders voted against the fund's continuation in its current form. If at least 75% of the shareholders approve the deal, the acquisition is expected to be completed during the third quarter of 2024. The offer price represents a 48% premium to Hipgnosis' share price before the initial takeover approaches in April. The journey of Hipgnosis has been a roller coaster. From its promising start, acquiring iconic hits from artists like Beyonce, Shakira, and Neil Young, to the financial challenges and eventual acquisition by Blackstone, the story is rich with lessons. Overestimation of song catalogs, rising interest rates, management issues, and unrealistic growth predictions all contributed to the struggles. Despite these setbacks, the impact of Hipgnosis on the music investment landscape remains significant. Blackstone's acquisition marks a new chapter. With their diverse portfolio and strategic integration plans, there's hope for better management and opportunities for composers, performers, and stakeholders. While the saga of Hipgnosis has come to an end, its story underscores the complexities and dynamics of the music industry. It serves as a reminder of the risks and rewards inherent in music investment. Thank you and stay tuned.